What is AI doing for founders today? Is it an opportunity? Is it a risk? Or is it a little bit of both?
Yeah, so I think I look at AI in maybe 3 different camps. The first would be, how am I going to use AI as a software operator to enhance my product, to make me more competitive? Whether that's features, function, whatever it is, I can do something new that I couldn't do before that makes my product more attractive, better from a competitive standpoint. I also look at AI as, how do I, as a software company, incorporate AI to allow me to be a more efficient organization? In other words, creating more profits or creating more free cash flow that I can invest back into the business, back into development to, again, create better products for my customers. And then the third thing that I look at as it relates to AI is the risk part of it, which I think is really interesting. And I don't know, I guess some people are talking about it, but I'd start with this. AI is a game changer in allowing us to do things that we weren't capable of doing before. So for me, recently, fun little project, I designed a hat with a cool little graphic. Molly saw the hat, she saw how cute it was, and I could never have done that 2 years ago. I would have had to hire a graphic artist. And I did this in about 30 minutes. Lots of iterations, do this, do that. The democratization of software development and enabling the average Joe, Sue, whatever, to be able to be a software developer, to create an application that can serve a market. We've taken the barriers that have existed. If you go back in time to punch cards, to machine code, zeros and ones, to higher level languages, we've been on this continuum to making software more readily available. So now if you have this democratization of software, think about the impact and how it could potentially change the market and the market landscape. So what does that mean from a market landscape standpoint and shifting? Will it create more competition to me if I'm a vertical market software provider and now there are fewer barriers? If you were in the auto industry and now it was easy to build a manufacturing facility, more people are going to build cars. Well, in this case, more people are going to manufacture software for an end market. And so for an end market that may have been a vertical, that may have had a limited TAM, now all of a sudden you've got new entrants entering into the marketplace. And what does that do?
How are buyers looking at software companies in AI today?
Well, this is my point with this is, I think from a buyer perspective, what I'm most interested in watching is, we've talked about how the private equity community entered the market because of the durability of the software subscription. You always hear, oh, it's durable, gross revenue retention, 90% plus, right? The things that we look for in an attractive software asset. And if you end up in a situation where new entrants enter the market, in market spaces where if it was a limited TAM, fewer threats of new entrants existed. But now the new entrants come in, what does that do? Well, me as the incumbent software vendor, if I'm not keeping up, then potentially that creates another option for my customer to get a better solution. So now that means attrition, or maybe more entrants into the marketplace. And now, as a result of that, pricing pressure. And so now prices start to fall, which means contraction. What does that impact? That impacts gross revenue retention. What does that impact? That impacts durability. What does that impact? It creates risk. And in any valuation model, theoretical valuation model, the denominator takes into consideration the cost of capital and risk. And if that risk goes up, that means the denominator is larger, which means the calculated value is smaller. And that calculated value is valuation. And as a result, how buyers could look at this is, if they think this is how it plays out, we could be today sitting in a really interesting position from application software where we're at the peak of value. And that's going to be the concern as we go forward, is how does it impact the way that the buyer community looks at valuations for software businesses?